Welcome to Learn Commerce PU online classes. Don't forget to like our video and subscribe our YouTube channel for all the updates.
Hello students, welcome to second PUC Accountancy online classes. Friends, in the previous class we have concluded dissolution of partnership firm. One chapter was remaining in part 1, that is the first chapter. I left it intentionally because compared to other chapters, it's like dissolution very easy to solve. Death of a partner, even it is easy, 6 marks. Then if we take up admission and retirement, goodwill treatment, if you understand properly, no disturbance, isn't it? Easily you can solve. But here you should know each and every item. But once you understand, then it is very, very easy. So I left it that is pending. Now let us take up that chapter, first chapter under part 1, that is accounting not for profit organization, accounting for not for profit organization, accounting for not for profit organizations. Now let us know what is not for profit organization. Not for profit organizations or non-trading concerns, we call them as non-trading concerns. They are not the trading concerns actually. They are not trading concerns. A small portion of trading concern may be there, trading activities may be undertaken, but major their activity is not trading concern. They are not trading concerns. They are established to provide service to the public at large, like hospitals, education institutions, public libraries, government hospitals, sports clubs. All these are examples for not for profit organizations. So friends, what is the difference between the trading concerns and non-trading concerns then? Not for profit organizations and profit organizations. Profit organizations, you know it very well, maybe sole trading concern, joint in the family firm, that is a different forms of business ownership, including joint stock company, MNC, everything, isn't it? They are all, their intention is to earn profit. They want to earn profit. They want to remain in the market. They want to establish their business, isn't it? They want expansion of their business. Ultimate aim is to earn profit. But here, in case of not for profit organizations or non-trading concerns, their intention is not to earn any profit. Though they earn some sort of, that is income, they have some sort of income and they will do some expenses during the year, and some amount may remain by the end of the year, but their main intention is not to do any trading activities. So make sure trading activity is not done by not for profit organizations. I told you previously, that is not for profit organizations, though their intention is not to earn profit, but still they do some trading activity, isn't it? Incidental trading activity, we call it as incidental trading activity. That is, suppose we have education institution, maybe a separate canteen may be there, where even the public can come, the parents or the well-wishers of the institution or anyone who visits there, they can have some food in the canteen, for which we will collect some amount, isn't it? We cannot provide free food to all the people, can we? No. Though their intention is maybe education institution provide education, not to run a canteen, isn't it? But still We earn some sort of profit by maintaining that canteen facility. That is called incidental trading activity. So, in not-for-profit organizations, some sort of minor trading activity may take place, but as a whole, their intention is not trading work. They are not doing any trading work. Their intention is to provide social service to the public at large. Religious institutions, isn't it? Then public libraries, sports club, cultural clubs, all these are coming under the banner of not-for-profit organization. So, their features, they do not undertake any business or trading activity. They do not undertake any business or trading activity. That means, I already told you, no trading activity will be done. Their major intention is they are established for the purpose of providing social services to the public at large. Second one is they are organized as charitable trusts or societies. Charitable trusts or societies. They are not organized as, that is, a partnership firms, a company, no. Then third one is the main source of income are subscriptions from members. Their major source of income is subscriptions. What do you mean by subscription? Subscription is the amount collected from the members of the not-for-profit organization. Isn't it? That is, if you subscribe for any books or maybe any other things from not-for-profit organizations, you have to pay some amount to them, isn't it? Suppose they are publishing some religious books, isn't it? For which you have to take the membership and you have to pay the amount, and that is called subscription. That is collected from the members. Subscription is collected only from the members, isn't it? That is the major source of income for the not-for-profit organization. That is another, that is feature. Even donations given, big or small, specific or general, we will take up later in detail those things. Or legacies. Legacies means what? The donation or gift given by a person. That is, on the death of that person, he will give some property or asset to the not-for-profit organization. So, those are called legacies. I will give the clear meaning of legacies later. So, this is another source of income for not-for-profit organization. And even the grant in aid, subsidy from the government, all these are also coming under the banner of income of not-for-profit organization. Then, the surplus is called income. This income is called income, or the net amount is called, after deducting all the expenses, whatever amount remains, that is called surplus. And mostly it will be distributed among the members. A small portion will be kept for expenses, then the remaining will be distributed among the members as there is like a benefit, incentives to the members, isn't it? And their reputation will be on the basis of the service they provide to the society. If you form a society and it is not helping the public, it is not providing any service to the public, then it will not be recognized by the public. If some societies, they provide services to the public at large and their intention is not to make money, definitely those societies, trusts or organizations, they will be recognized in the society and their reputation will increase. What are the records that are maintained by? That is final accounts of non-trading concerns or not-for-profit organizations. Let us move on to what are the final accounts of not-for-profit organizations. There are three accounts, three final accounts: receipts and payments account, receipts, RECEIPTS, receipts and payments account. receipts and payments account. Second one, income and expenditure account. Income and expenditure account. Third one is balance sheet. Balance sheet. Receipts and payments account, you know it very well, right? It is like a cash account. If I tell you cash account, you will understand, isn't it? On the debit side, you will enter all the receipts or amount received, and on the payment, that's a right hand side. On the payment side, credit side, you will enter all the expenses that is paid in cash. So it is just a summary of cash account. Receipts and payments account is just like a cash account, and it will have opening and closing balances. Opening balance is to balance brought down, that whatever you are writing in cash account, in the same way in not for profit organization, they will create an account which is called receipts and payments account, and whatever amount is received, cash received, that will be entered on the debit side of receipts and payments account, and whatever amount is paid or any expenses made in the form of cash, that will be credited to receipts and payments account. Clear? Like when we prepare cash book, isn't it, or cash account, we will enter all the amount received on the debit side and all the payments made on the credit side, so that we will get a final balance of cash, how much cash is lying in the business or in the concern or in the society or in the trust, isn't it? So that is what receipts and payments account is. Remember, it is prepared on cash basis. Receipts and payment account is prepared on cash basis and not on accrual basis. What do you mean by accrual basis? Accrual basis means we are concerned about to which year it belongs, current year or not. If it is yes, we will include it. Accrual basis, we will include it even if it is not realized or even if it is not paid. But when we take up receipts and payments account, cash account, we are not concerned about to which year it belongs. When we receive some amount, maybe received which was pending during last year's income is not paid, last year's subscription is not paid, the members gave it during current year, we are not concerned about whether it belongs to last year or current year, we will enter on the debit side, because it is written on cash basis and not on accrual basis. So we are not concerned about to which period it belongs. Any amount received, we will enter. Any amount paid, we will enter. Maybe last year's salary, pending salary has been paid during current year, but we will make an entry in the receipts and payments account. We are not keeping it outside. We are not neglecting it by stating that it belongs to last year, so I will not enter. No, it is not like that. We have to enter all the amounts paid during current year, whether it belongs to current year, next year or previous year. Clear? That is called cash basis. And income and expenditure account, we will take up receipts and payments account in detail later. Income and expenditure account, it is an account which is prepared, it is a revenue account. It is a revenue account. That means all the incomes and expenses of current year are only recorded, and it is written on accrual basis, not on cash basis. That is, we are concerned about whether that expense belongs to current year or not. If it is yes, we will record, we will add. Suppose current year salary is outstanding, we will include here salaries, inner column, that is amount paid, add outstanding, which is not paid. Our criteria while preparing income and expenditure account is, we are concerned only regarding whether it belongs to current year or not. If it is not, deduct. If it is yes, then add. That is the rule. Remember. Clear. And we are not concerned about which year to which year it belongs. Is it? In case of receipts of payments account, but we are concerned about to which year it belongs here. If it is belong to current year, we will include, otherwise we will deduct. Remember, whether it is previous year, next year, we are not concerned. If it belongs to current year, we will record. So that is what we will do here. And this is written on accrual basis, not on cash basis. Whether it is realized or not, we are not concerned. We are concerned about whether it belongs to current year or not. That is our concern here. But in case of receipts of payments account, we are concerned about only whether we have received or not, or paid or not. We are not concerned about to which year it belongs. We are not concerned. Yes. Then balance sheet is a summary of all the assets and liabilities that the trust or concern or club that is having. Like maybe some furniture may be there, isn't it, in the business, or maybe some building may be there, or some other items may be there, isn't it, like a sports club, that is net, ball, bat, everything may be there. We consider it as asset. And the difference between the total assets and total liabilities of not-for-profit organization is treated as capital fund. Capital fund. In trading concern, we take it as capital account, but in case of not-for-profit organization, we take it as capital fund. And we should make a clear distinction between the capital and revenue items. I'll just give you the meaning of capital and revenue here. What is capital? Capital is, I will give you example, and in the meantime I will explain. I have 10,000 rupees. I have paid salary to my employees. Maybe 3 employees are there. I have paid 10,000 rupees. For how much time we will get their services? Only for 1 month. Am I correct? The same 10,000 is invested for purchasing ceiling fan. I have bought 2 or 3 ceiling fans. Whether you will throw that ceiling fan after 1 year? No. For how much time the ceiling fan will give you benefit? Maybe for 5 years, 10 years, isn't it? After repairing, again you will use that ceiling fan. But if you pay salary to the employees with the same amount, next month again they will stand in front of you, pay my salary, otherwise I will resign. I'll go out of your firm, isn't it? So the same amount is invested in 2 separate, that is, activities. One is giving long-term benefit to you, that is, investing in ceiling fan. The other one, you are investing in payment of salaries to the employees. You will get services of the employees only for 1 year. No, 1 month, I am sorry, 1 month, not even 1 year, isn't it? So you are getting short-term benefit. Short-term benefit. Here you will get long-term benefit. This is the difference between capital and revenue. Very simple. There are 2 types under each: capital and revenue. I will take up here revenue. Here you will have capital receipt and capital expenditure. Capital receipt and capital expenditure. Again, when you take up revenue receipt and revenue expenditure. I'll give you an example for each one of these. You will come to know. See, capital receipt. I have received donation for construction of a swimming pool. Maybe in education institution we are constructing a swimming pool. So we got donation from someone. This amount will be given to you. You have to construct a swimming pool in your education institution. The amount is given to the concern, to the institution for a specific purpose. The trustees or the owners of that not-for-profit organization, they should not utilize that amount for any other purpose other than for the purpose for which it is provided. The amount was received only for construction of swimming pool, so that amount should be utilized only for construction of swimming pool and not for any other purpose. Not for any other purpose. That is capital receipt. The other one, capital expenditure. We have invested to purchase maybe a small room or building, or we have purchased ceiling fans, or we have purchased a table, desk and all these things for our concern, which gives long-term benefit, to the concern, that is capital expenditure. This is expense, this is income, isn't it? But both are for longer period of time. Then revenue expenditure, you have paid honorarium. Honorarium means like salary. In trading concern, we call it as salary. In case of non-trading concern, we call it as honorarium, because it is not as per the efforts of the employee. Suppose in trading concern, if you do the same work as a secretary, you may get maybe 20,000. But if you you do the same work in not-for-profit organization, you may be given maybe 2,000 or 3,000 rupees or 5,000 rupees. That is called honorarium. And every month it should be given, like salary you are giving, isn't it? It is revenue. So it is revenue which gives short-term benefit to the business concern, called revenue. So here, revenue receipt. When we receive subscription from members, every month they have to pay. So it is revenue receipt. And that is revenue expenditure. Revenue expenditure is, I'll give you example. Maybe you have paid honorarium, isn't it? Expenditure. Revenue receipt is subscription. Revenue expenditure is honorarium you are paying to the, maybe that is or locker rent you are paying, isn't it? Locker rent. Every year you have to pay. So it is a revenue expenditure. So that is the basic difference between capital and revenue. I will take up the other part in the next class. Right. Questions. Mention the final accounts. Mention the final accounts prepared by not-for-profit organizations. Mention the final accounts prepared by not-for-profit organizations. Submit assignment on time. Thank you for watching this video. Thank you.
Don't forget to like our video and subscribe our YouTube channel for all the updates.